Hello, folks. Welcome to Pro Trader Strategies. It's Friday, August the 13th. Yes, it is Friday the 13th. I'm Eric Wilkinson, and what we're here to do is to teach you guys a little bit about the markets and, more importantly, how we can implement option strategies around those assumptions. Sorry about that, folks. That got a little loud in my ears, too. Throughout this video, please comment over there on the side as I'm going to be checking in on that. I want to make sure you folks are clear of concept before we move on. So if you guys want me to talk about anything in particular, then please throw it in over there at the side and smash that like button for me. It does help out. And finally, there's a subscribe button down there. I don't always come on just at 8:30. Sometimes I'm going to pop in later on in the day and talk about option strategies that I find maybe later on in the afternoon. All right. So make sure you have that notification, a little bell, so that you guys get a heads up when we're coming on. All right, so in this video, we're going to talk about the economic data, how it impacts the markets, and then ultimately end up talking about some option strategies I've found in the overall markets. All right, so today's economic data, we got consumer sentiment, and it's the University of Michigan consumer sentiment, folks, and was expected to be 81.2. It came in at 70.2, folks. That is lower than the levels we saw at the beginning of the pandemic back in April, right at the basically height of it all. That with our level right now is lower than that, maybe due to the Delta variant or anything else that's going on here in the United States. But that number is the lowest level we've seen since 2011. All right, so a massive miss on that headline number. University of Michigan inflation expectations coming in line at 4.6%. Now, something I want to talk about from earlier on in this week, we talked about the consumer price index numbers. Those numbers came in slightly soft, right? So we were expecting to see some of this maybe lower inflation or it being a little bit more transitory in nature. Well, what do we see? Well, consumer price index, let's break that down. That is the consumer. But keep in mind, consumer is somebody that could be running a business and buying materials and things of that nature. Now, the PPI is PPI is the producer price index. So this is the number that the manufacturer is seeing in the overall numbers. All right. So producer price is basically what these guys are looking at for their pricing. And it did come in hotter than expected at 1%, expected to be 0.6%. And the core PPI, stripping out food and energy, came in at 1%, expected to be 0.5%. So producers not necessarily able to offset some of those higher prices as of right now. All right, let's get on with the overall markets. We've got to share the screen. See, I remember that finally. Way small wins. We can always win something there, right? All right, crude oil is coming off. I expect to see more weakness in crude oil. I think that the lack of demand there and the higher inventory numbers is going to cause a little bit of weakness here in crude oil, especially if the consumer isn't confident due to this Delta variant. Means less travel, right? So maybe that reopening trade is a little bit iffy at this point. Gold making some moves to the upside. Everybody's talking about Bitcoin these days and how the acceptance is having an effect on the strength in Bitcoin. I was getting a little bit nervous about this when they were calling it boomer coin and everything else, but now we got Venmo and a lot of these other companies starting to accept Bitcoin as a currency. So that is going to give credence to this. So I think that those 2500s might be out the window in the near term. All right, bonds are moving higher again as interest rates start to lower a little bit. This consumer confidence has got to throw a kink in the cogs here, because if the consumer isn't confident, then the consumer isn't likely to spend willy-nilly in these roaring 20s we were expecting here. So the roaring 20s may be put off for another year into 2022 anyway. VIX coming off. We were seeing some newer highs here today in the markets. NASDAQ near the highs of the day. We are moving just a couple ticks off of those highs. You know, the thing is, though, in this sector, I'm looking at a lot of things that aren't really working. So some of the major names in these indices, I think, are driving these prices a little bit higher here. Now, I'm not a mathematician, and I'm not going to go into the numbers and break down all of the percent versus the moves higher here, but it feels very strong. Only because of those bigger names. I'm going to show you a few things here in a minute that is looking a little weak that we could take advantage of to the downside, but you can see the Dow Jones Industrial Average, new high here. E-mini S&Ps, another new high. As a matter of fact, we printed the high yesterday. Remember I was talking about that. I think the high was 4,444.25. Well, we beat that yesterday as we had a late day strength in the markets. You can see the market just strong almost immediately after I said the risk was to the downside. I still believe that the risk is to the downside. These markets are grinding a little bit higher, but we're not making any incremental moves higher that is making this market look very strong here. All right, so let's talk about my trades. XLF, actually XLF is part of the financial sector that I was looking at. It is looking really weak. And if you look at this, this is a textbook topping pattern here. As we can see the strength into yesterday, basically making this topping pattern and then a confirmation as of today. Finish below right where we are now or below yesterday's little wick there on that green dot there. That's something that would be a confirmation to the downside. So XLF is looking weak. As a matter of fact, that was something that sparked me to go start looking into the financials. You know, I talked about the regional banks doing a little bit worse based on lower interest rates and not having that big margin where some of the bigger institutional banks would do weren't going to see that weakness. Well, right now we are starting to see some of those institutional names see some weakness. We've got Goldman Sachs. That chart looks like the last one, right? I mean, we can see that right here in this, that is looking like a topping pattern there. That was BAC, I think, right? I wanted BAC. So Bank of America, another topping pattern here. Morgan Stanley, topping pattern. Citi, topping pattern. Let's look at that Morgan Stanley. That's a dark cloud where you basically have encompassed the previous day's move. So this is something we would need to look at also for a topping pattern. This is a dark cloud basically engulfing the previous day's candle. That would be a bearish one also. You know, if it looks a little fuzzy here, all you need to do is start looking at the other ones in the same sector and see that they are doing very well. Must have been, Citi, all of these not looking very well. So with that said, in JP Morgan, I decided to add some negative deltas in my portfolio by going into the November, and I bought the November because I want to limit that theta decay, right? I want to try and hold on or retain value. I got to be a good steward of my capital when I'm trading options. That means if I'm buying, I need to make sure those premiums are really cheap. The only way to really tell if they're cheap is by looking at implied volatility. That is the thing that drives price in the option montage, okay, folks? And when we see it at these low levels for itself, I'm not talking just the number of 23 or 24 down here on the side, but this mark in relation to the range that we've had before. And you can see that these premiums are extremely cheap in that case. That's how we logically think about options here, is that we look at implied volatility because implied volatility drives that price. The higher the volatility, the higher the price. The lower the volatility, the lower the price. In this case, we have really extremely low volatility, so I decided to go and take advantage of cheap premiums. I've got a bearish directional assumption. I want to limit that theta decay. That means I have to go out in time because theta affects the further duration options much less than those nearer duration options, okay? And volatility affects the further duration options more. So if I get volatility expanding quickly, that will help out my position if I'm buying something and those premiums go up, despite the fact that the underlying may or may not move anywhere, right? So with that said, I'm playing this to the downside, looking for it to come back down to the point of control. You don't want to work for me? So what we're looking for is it to come back down to the point of control. And as you can see, it's lining up very close to 55. Well, that 55 number happens to be, or 155, happens to line up with the 36 delta that I talk about when we're trading options or buying options. I've got a bearish assumption. That's why I go out to that November to limit that theta decay and take advantage of volatility expansion, buying the 155 puts in there. And I paid, I think it was, now I lost my notes all of a sudden. I don't know what just happened there. JP Morgan bought the Nova 155 puts in there for $5.75. I should have remembered that one. I paid the high on the day at the time when I did that, so I should have remembered that. A little bit of a brain fart there. So taking advantage of some more negative deltas in the banking sector. I have on some of the regional banks on the negative deltas, but now I'm moving into that institutional side with JP Morgan. The other thing, if you're looking for something with weakness, I'm saying the retail sector making those same type of topping patterns. We can look at this is Under Armour, Macy's, which is a little bit of a cheap stock to do it, but it does have that dark cloud engulfing pattern from yesterday, making that look very bearish. TJX or TJ Maxx is showing some weakness here. Two topping candles, confirmation today. Right here, we've got the candle top, all right, or hangman top, and then confirmation today. So looking pretty bearish in the broader sector here. Lululemon, another one, confirmation. We've kind of gotten that rollover from the 415 and continuing to make this move. I'd really like to see it break below 402 or this Fibonacci here before I'd really want to jump on board, because I think it's going to act as support. As you can see, it's acted as resistance before. That means it will act as support now that we are above it. All right, so that's how those support and resistances will work. That line, if it bumps up against it, it's resistance. And if you break above it, it now becomes support for you. All right, so Lulu is another one that I'm going to be looking at, TJX, Under Armour. And another thing I wanted to talk about, everybody's talking about Disney and the streaming services doing very well, and Netflix also. One thing everybody's kind of forgetting about here today with these streaming services is everybody is skipping out on YouTube. And I'm telling you, YouTube, I think, is going to be the bellwether of all of this. My kids, everybody I know that is basically younger than 20 is on YouTube, more so than Netflix. Netflix, Disney, and all of those are really being determined by the parents. But as these younger generation starts coming in and having to pay for their own bills, folks, what are they going to choose? The thing that they know, YouTube, or maybe I'll go check out Disney and stuff like that. It's going to probably stay with YouTube. So while people are jumping on board with the Disney streaming services, and now Netflix is getting a little bit of follow through from it, if you look at something like Google, the Google is actually in negative territory today. I would think that that would give a little bit of a boost to the upside in Google as well, but it's getting a little bit of a drag there. Will you offset the JP Morgan NOV put with a sell of a nearer put and make it a diagonal? That's a great question, Shal. I usually won't do that with this type of strategy, only because the implied volatility is so low that the one that I'm going to be selling is just not going to give me the premium in that close duration right now. I do show you how to set up like a diagonal, and I will set that up when I see the opportunity, when it follows in line with the rules for that. So please check that out. Now, if volatility were to kind of spike here and I didn't get my directional move, then that might be an opportunity to come in and start selling some premium type of strategies. But yeah, got it. Low. The IB is way too low right now for that. And that's exactly why. That's why I actually even went in and just bought a put and didn't even try and do a put spread, right? Because that volatility is so low, I just am able to buy in really close. So that's why I took advantage of that. It's not too far away. Great question, though. I appreciate that. And that's about it. The only thing that I've really done here is in JP Morgan. Obviously, though, I am trying to cover a couple of other things, still trying to cover some short calls and puts that are really close to expiring at this point in time. And that's in GLD. If you guys remember, I sold those puts in there. I've got a couple working orders in there in the August, and they're actually looking very close right now. I'm working August to buy back my 158 puts, and I also have on the August 161 puts. The 161 puts, I'm working 7-cent bid, it's trading around 12, and the 58 puts in there, it's really close. I'm trying to get out for a nickel, and it's very close there. Las Vegas Sands, not very close, and XLE is close, and those are on the August 52 calls in there that I'm trying to buy back for a nickel. It's trading around 8 cents right now. So I do have a lot of working orders. Don't know that I'm going to have the opportunity to come back in here today and tell you that I get those. So just keep an eye on those if they start trading, because I've got a teenager getting wisdom teeth pulled today. So that ought to be really funny. Maybe I should take a video and see if it goes viral. Maybe he heard me. All right, no, kidding. I'm not going to do that. All right, before you go, make sure you subscribe, hit the bell, because that gives you a notification if I pop on late in the day and talk about option strategies that I found. Smash the like button. It does help us out. And make sure you comment over on the side. If you aren't clear or you want me to cover something, I want to know what you guys are looking at. Make sure you're clear of concepts so that we can be confident, mechanical, and make some money together. All right. So have a great weekend. If you can't take that, take it easy.